Did you know that Warren Buffett started with a small investment in a pinball machine business? Or that John Templeton bought stocks for less than $1 during the Great Depression and those investments made him a millionaire? These are just a few of the facts behind some of the world's most famous investors. Their strategies and philosophies have shaped the way many people approach investing today. Let's explore their methods and see what we can learn to apply to our own investments. Cathie Wood is the founder of ARK Invest, known for its focus on innovation and disruptive technologies. She has made a name for herself by investing in companies leading the way in fields like genomics, robotics, and artificial intelligence. One of her flagship funds, the ARK Innovation ETF, saw significant gains over 5 years. However, this fund also experienced significant volatility during the tech stock sell-off in 21 and 22. Wood remains optimistic, viewing market sell-offs as buying opportunities. Do you see market downturns as a chance to invest in high-potential companies? Wood's approach is bold, but it comes with risks. Investing heavily in high-growth, high-risk sectors can lead to big gains but also significant losses. Philip Fisher, born in 1907, is one of the most influential investors of the 20th century. His book Common Stocks and Uncommon Profits is a classic in investment literature. Fisher believed that young companies offer the greatest potential for growth. He emphasized thorough research and often relied on personal connections to gather insight about companies. Do you take the time to deeply research the companies you invest in? Fisher focused on buying stocks in companies with strong management and growth prospects. He held onto these investments for the long term, often for decades. One notable example is his investment in Motorola, which he held from 1955 until his death in 2004. Fisher's mantra was simple: focus on quality over quantity. He believed in holding a few outstanding investments rather than spreading resources across many good ones. Warren Buffett, known as the Oracle of Omaha, is the most famous investor in the world. His investment strategy revolves around value investing. But what is value investing? It's about finding companies that are undervalued by the market but have strong growth potential. Buffett looks for companies with a durable competitive advantage, such as a strong brand or loyal customers. He buys these companies at prices that provide a margin of safety. Buffett is not in a hurry. He holds onto his investments for years, sometimes even decades. Why? Because he knows the power of compound interest. His patience and discipline in avoiding overpriced companies have been key to his success. Buffett's strategy evolved over time. He started by investing in struggling companies with some value left, a method called cigar butt investing. Later, influenced by his partner Charlie Munger, he shifted to buying high-quality companies with a durable competitive advantage, what he calls a moat. Buffett sticks to his circle of competence, meaning he only invests in industries he knows well. This approach helps him avoid high-risk sectors like technology and stay focused on industries like retail, insurance, and finance. Buffett also values strong management. He looks for ethical leaders, as he believes they are crucial for a company's long-term success. Bill Ackman is a well-known name in the world of hedge funds. He runs Pershing Square Capital Management, a fund with a history of strong returns. Ackman's approach is known as activist investing. He buys large stakes in companies that he believes can increase in value through specific changes. But Ackman doesn't just buy and wait. He actively pushes for the changes he believes will unlock value. This hands-on strategy is different from more passive approaches where investors wait for the market to improve. However, activist investing is not without risks. It can be controversial, and not all companies welcome outside pressure. Also, this strategy requires substantial resources, making it difficult for smaller investors. Even with the risks, Ackman has proven that a hands-on approach can lead to significant returns. What do you think? Would you be comfortable actively pushing for changes in a company you invest in? Benjamin Graham, often called the father of value investing, laid a foundation for Warren Buffett's success. Graham's strategy is simple yet powerful. Buy stocks priced below their intrinsic value. This approach provides a margin of safety, protecting against market downturns. Graham's teachings are still relevant today. His books, Security Analysis and The Intelligent Investor, are considered must-reads for anyone serious about investing. Do you know the concept of a margin of safety? It's all about minimizing risk by buying undervalued stocks. Core Graham's philosophy. Graham's conservative, risk-averse strategy has stood the test of time, proving highly effective especially in volatile markets. Are you focused on buying stocks at a discount to their true value? If you're interested in investing in commodities, stocks, crypto, indices, or bonds, you should definitely try Dukascopy. You can invest with just one click, starting with just $1. Sounds good, right? Simply scan this QR code or check the link in the description below to get started. Fill out the form and then make a video call with a Dukascopy operator. That's all you need to do to open your Dukascopy bank account. Your Swiss bank account with Dukascopy will be ready to use the same day. Peter Lynch managed the Fidelity Magellan Fund, growing its assets from 20 million to over 14 billion US dollars in just 13 years. Lynch's investment philosophy is straightforward. Invest in what you know. This principle encourages investors to focus on industries and companies they understand. Lynch is also known for his emphasis on long-term investing. He advises holding on to strong companies and letting them grow. Are you patient enough to hold on to your investments for the long term? Lynch's ability to spot trends early and invest in high-growth companies was key to his success. Do you keep an eye on emerging trends that could signal the next big investment opportunity? George Soros is famous for his bold investment strategies and for making massive bets on currencies and securities. His most famous move? In 1992, he bet against the British pound and reportedly made over 1 billion US dollars in profit. This earned him the reputation of a financial genius. Soros's approach is high risk, high reward. He makes short-term bets on market movements, often using significant leverage to amplify his gains. But this strategy is not for everyone. The risks are high and the potential for loss is significant if the market moves against you. Would you be willing to take big risks for the chance of big rewards? Soros's success shows what's possible, but it also highlights the dangers of aggressive investing. John Templeton is known as one of the greatest contrarian investors. During the Great Depression, he bought 100 shares of every company trading for less than $1 US. This bold move made him a wealthy man. Templeton later founded the Templeton Growth Fund, delivering annualized returns of over 15% for nearly 4 decades. His strategy? Buy when others are selling and look for opportunities where others only see risk. Templeton was also a pioneer in international investing, recognizing the potential of global markets long before it became popular. The strategies of these famous investors offer valuable lessons for anyone looking to grow their wealth. Whether you prefer Warren Buffett's value investing, Bill Ackman's activist approach, Benjamin Graham's foundational principles, Cathie Wood's focus on innovation, Peter Lynch's growth strategy, George Soros's bold bets, John Templeton's contrarian moves, or Philip Fisher's emphasis on quality, there's something to learn from each. Ask yourself, which strategy resonates with you? Are you patient like Buffett, bold like Soros, or innovative like Wood? Understanding these approaches can help you refine your own investment strategy and navigate the market with more confidence. If you like this video, hit the subscribe button and join us at DukascopyTV, your essential hub for all things related to the biggest financial markets from around the globe since 2008. Here we bring you diverse perspectives with our range of hosts and presenters, delivering top quality content that's straightforward, independent, and without any ads. Thank you for watching, and I'll see you in the next one. Bye.